take a look at this bearish move in Ethereum. How it has been sustained with a bearish channel and ended with a range culminating in a bearish climactic action that every retail investor will interpret as cryptocurrencies crashing. Look at what we've identified here. See what has happened in this bearish candle. Let's zoom in a bit and see where the highest transactional volume of this aggressive red candle is concentrated. I think it's quite clear that it's concentrated at the bottom. And if you observe, the predominant color is red. In other words, the order flow has favored Bitcoin. And I think it goes without saying that if we see such a representative climactic volume, we need to pay attention to how these sellers are unable to succeed to the downside. And if you're wondering why this is so important, I'll explain it to you now. Look, you're looking at the Ethereum chart as you would on your home trading view on a 4-hour chart. Well, to better understand the context, let's switch to the 1-hour time frame. And now, look at the following. In previous live sessions in the Crypto Insight, we identified this defensive zone well in advance to anticipate that price. That may lead to an aggressive, deceptive, bearish, climactic action, always with the perspective of being positive in the market based on what Bitcoin was doing, which I'll show you later. But now, look at how we visualize that drop in Ethereum. And if that ends up happening, it's because Ethereum has to go to this defensive zone, and it's not the end of the world. I mean, the current level of 29.94, that famous level of 29.94, well, it can offer reactions, yes, in fact, it already has, but we don't know if it's going to be the border, the Great Wall of China, where nobody is going to pass through until a few years later as a tourist attraction. Or if it's going to break through. I mean, it could happen, you know. So now that we are clear that we were looking for a trap, that a drop below 29.94 was possible. Also a key level, by the way. A key level, by the way, for scalping to the upside, I must say. But as I had shown you before, we had an impulse followed by a channel, continuing with a range. And here we have that bearish climactic action that comes to impact against a relevant level. This is what climactic actions always do. They come to impact against a relevant level, which, as you have seen, we were already claiming to have identified. And if you go to the order flow chart and see that the defensive zone passes through here, you see the bearish climactic action on which we clearly identify how the sellers, those unsuspecting investors who do not watch the Crypto Insight videos, try to sell down there. Well, you know what happens to them. Here we have absorption, and the rest is history. And what we are paying close attention to at the moment is the gap, the potential gap. In other words, the existing buying weakness that we are seeing in Ethereum in what could potentially be. Everything remains to be seen, of course. A bullish accumulation process. Now let's see how Bitcoin, unlike Ethereum, has set a trap for us. About the defensive zone, an event that we gave great importance to in the Crypto Insight, in which I remind you, we were looking for where that trap limit level passed through, and we identified it with this channel, and here we were very attentive to the eventual situation. That all this was a structural macro trap that finally ended up being confirmed. And what we were telling you in previous videos was that when we were around this point, we expected Bitcoin and cryptocurrencies to fall, since they had a clear bearish bias simply because we had seen this trap confirmed, which generated an impulse that we were already visualizing that we had finished with a deceptive bullish climactic action that nobody believed in, and for those reasons it made a lot of sense for the price to have a bearish bias, at least to approach or even contact this defensive zone. That's why we shared with you that this downward movement could occur, with the search for a replica, and this zone would be where smart money should respond and move the price upwards. Now that we can confirm that we have done the structural test, that's why in the latest videos and live sessions of Crypto Insight, we have been looking for and identifying at which points the price could turn around, basically to look for these types of upward movements. Now, I'm going to share our vision of what the markets can do next. But before that, welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity. Let's do an exercise together. On the left, we have Bitcoin, and on the right, right, Ethereum. And now I want you to pay attention to the following. On one hand, in Bitcoin, which I hadn't told you yet, here we have a fairly clear distribution that breaks its creek, generates a supply line, and has taken the price down. And we already know how, with the classic impulse channel range climactic action. A climactic action, by the way, that takes us to the institutional target of the entire distribution. We already know how smart money moves markets, and what I can tell you is that smart money does not move quotes, as smart money concepts analysts like to say. What a lie, to put it mildly. But what I want to share with you is the following. Notice when Bitcoin generates such a climactic action. At the same time, Ethereum is also doing it. Unlike Ethereum, on the right, after generating a micro trap on the well-identified defensive zone, it comes and validates the structure for us, while Bitcoin sets a trap for us. At this point, we clearly see that Bitcoin is setting up a whole structural trap, while at the same time, Ethereum is confirming the structure, and we have been in a scenario where we have been waiting for Bitcoin and Ethereum in these key defensive zones with a lot of anticipation. Where we see on top of that, they are coming to land with bearish climactic actions. With order flow in these bearish climactic actions, we identify sellers who do not watch the Crypto Insight videos. We have it all. And now seriously, do you still find a methodology called smart money concepts interesting, where they claim to track strong hands without even looking at volume? In my town, we call that having a very thick skin. Who the hell do they think is tracking smart money without even considering volume? For those of you who understand how volume works, I'm absolutely sure you're nodding your heads and even face palming. But what's happening? There are certain YouTube channels without any ethics or morals that start talking about things they know nothing about. Plainly speaking, they have no fucking clue, and since many others do exactly the same, they end up flooding the networks with pure misinformation. And unfortunately, we're all victims of it. Okay, let's continue with Bitcoin. Now that we are seeing its price, well, we must never lose sight of this accumulation process that at the same time is a macro trap, which has now tested us, a macro confirmation. This invites us to think from the outset positively about the ecosystem, but as you well know, we have been defending this concept for about a week now. What this leads us to think is that these distributing agents that have recently generated a supply line have been overcome. If we cross this with Ethereum, we will see something similar. Here we identify a key creek, a compression against a relevant level, which is this micro defensive zone that at the same time has generated this selling weakness for us today. And now both Bitcoin and Ethereum would have broken their creek. So how should we manage all this information? Look, let's do the following analysis. On one hand, this bullish impulse is begging for a replica. Here, of course, we would like to see such a replica. On the other hand, here we have a micro bearish impulse that is also begging to have a replica. What does this tell us? What if we're in the classic structural trap to try to look for this replica, that this is then a W, and that here they make us a harmonic pattern that fails, and that it could be a poor eye to then look for the replica that matters to us? This is certainly on the table, and how we are going to follow it up. Look, that's why we have this trend line drawn. In the end, this is our control point. We see an interesting breakout. Here we will have to see if this breakout to the upside is able to prosper or not. As it will be of great help, it will be a great indicator to see if we surpass the flat pattern. Because when we have such a key structural breakout, sometimes they want to confuse us. They generate what we call a flat pattern to then continue. That means that the flat pattern is a control point to know if these people are serious about continuing, or if instead we are in the classic trap scenario. Here would be the trap. Here would be the trap to turn around. As I said, perhaps to look for that replica. A failed harmonic pattern falls short and gives great fuel to then seek the macro replica. Moral of the story: look at how important the flat pattern is. As you know, in 90 of the videos we share a unidirectional opinion, but sometimes it is not seen in an extremely obvious way. But we don't consider it a problem either, since we understand why each thing is on the chart, and depending on how smart money interacts with these structures, we already know what we can expect or not. And if this analysis is blowing your mind, I must tell you that it is a very advanced technical analysis that I recommend you watch again, since in Ethereum we would be expecting something very similar. On one hand, here we have a very aggressive bearish impulse. Here we could be having the classic correction. This could be its failed replica. Therefore, let's see how we are going to position ourselves in the long term conceptually. And then this bullish impulse is crying and begging to have that replica. And here the question is the same as with Bitcoin. This bearish impulse, which could be this replica, is going to try as a trap to look for a replica that fails, to then already look for that macro replica of Bitcoin that in Ethereum they don't let us see. But that could be about finding the defensive zone to then offer the good movement. All this is on the table, and I am very sure that this week weekend as soon as we see what the price does with the flat pattern. And with the creek, in the next video you will have, as in 9 of the occasions, a unidirectional sentiment. In the end, we are led by the market and what is allowed to us. But it's easy. Look, we have pierced the creek. We are working the flat pattern. If the flat pattern is pierced decisively, hey, let's wait for that replica that Bitcoin promises us, and if we see that it fails and that this already returns and tests the creek, well, my friend, we are going to give continuation at least to the attempt, to see if it fails up to here, to later look for the macro replica. It all depends on how the price interacts with the flat pattern and with the creek. Now tell me, what do you think of the smart money concepts methodology? What do you expect from the crypto market? Are we going up or down? Leave me your opinion in the comments. Also, like the video, subscribe to the channel, and click on the bell icon so that YouTube notifies you of future posts. Good luck with your trading, and until next time.